Welcome to the WangHiro podcast, where we answer Malaysians' burning questions about personal finance with fact-based answers. Most of us grew up watching Disney movies. The fairy tales spark our imagination and make us believe in magic. They set the bar for animated films. If you've been to Disneyland like myself, that magical feeling is truly unforgettable. Walking among the castles and princes simply make the characters and sceneries you saw in films come to life. Yet, why has Disney's stock fallen to its 9-year low? They are even underperforming the S&P 500. Even if you're the biggest fan of Disney, the question we're asking today is, should you put your money in the company behind the fairy tales and magic? Welcome back to Stock Investing from Zero with WangHiro, our weekly stock analysis for absolute beginners. Today, we are putting the investor's lens on the household name, Disney. So, John, what should a beginner look at when considering investing in Disney?
Sadly, when you were narrating all that, I was like thinking, my kids don't even have an affiliation to Mickey Mouse and Minnie Mouse anymore.
Is it true? Oh, that's sad. So what do they watch? Huggy Wuggy, right?
No need that. They watch like YouTube characters, which is like quite sad because a lot of them have questionable values. Skibidi Toilet, I don't know if you heard of it. Never, right?
I think the name itself,
Yeah. So back to Disney. The usual 4 questions: what do they do? How do they make money? Okay, are they profitable and financially stable doing it? Who is the audience and how big can they grow? I mean, like if my kids aren't like attuned to those kind of brands anymore, are they adapting the times? And last but not least, valuation wise, are they cheap or expensive? Okay, so what do they do? How do they make money? Profitable, financially stable? Who's the audience? How big can they grow? And are they cheap or expensive? So we start with the first one in terms of revenue stream. So they actually have 4 distinct segments. The first one is media networks, or they call it linear. I think they're changing name to linear entertainment now. Parks, experiences, and products, studio entertainment, and last but not least, direct to consumer and international. Okay, so as of October, they are reorganizing. October 2022, they're reorganizing into media entertainment business to be more of a direct to consumer kind of strategy. Okay, so if you think about today, we know Disney from TV. We know Disney from their theme parks, like how you narrated. But they also have other streaming avenues that may not be apparent. Like, for example, do you know they're very big in sports as well?
No, not really. No.
Okay, ESPN belongs to them?
Really?
Yeah.
Wow. Oh, I didn't know that. No.
Yeah.
No, I didn't.
So like ESPN belongs to them. Hulu belongs to them as well.
Hulu, yes, I know that.
Hulu. Yeah. Okay. So in terms of which one gives them the most amount of money, it's actually this part called linear networks. Okay, linear network compasses the broadcasting networks, affiliation fees, advertising, licensing fees. So all the brands, the royalty, and all that kind of thing, that actually is all bundled under linear networks. That consists about 47% of their revenue. Okay, the second part, the second largest one, is actually direct to consumer. Their flagship product, which is the Disney Plus. Okay, that contributes roughly about 22%. Okay, and then the content sales licensing, that's only about 10%. So this is like if they license to a third-party vendor. So like if last time, Marvel used to be Netflix used to license content from Marvel.
Yeah.
So this content licensing all will fall under this video on demand and all that kind of thing. So I think the beauty about Disney's product is that they have an IP. You think of them as their business, they have an IP, and then they monetize the IP through either licensing or either through a park, which is a ride and experience or whatever, and either through a movie, which is watching. Usually the IP, it's a movie, you create a connection to the brand, to that story, and then you relive that experience through the park. I think that's how I would describe Disney's business. And this is what I've gathered after. I was a Disney investor prior to COVID, actually. Really enjoyed it. The reason why my hypothesis for investing in Disney was they own content all the way from a 5-year-old all the way until a 60-year-old. if you think about it. So you've got your 5-year-old, you've got things like your cartoons, your Nickelodeon channel, whatever. So you even the older teenagers, they have Nickelodeon, right? Then you think about the young adult. So you've got the Marvel, you've got the action movies. Now they own Marvel, they own Pixar, they own 21st Century Fox, right? And they even own Lucasfilm, which is Star Wars.
Mm,
Okay, so they own content for like all the kids and adults. And then you think about the older guys. What do the older guys watch? 50, 60-year-old guys, right? They watch sport. So they own ESPN. So you can imagine, cradle to the grave, they own all the IP for the content, everything. Yeah, so that was my hypothesis. And then at that point of time, their parks were really thriving, making money.
yeah.
And it was the most expensive place to go to if you want to like treat your family, right? And that was a very holistic concept. But COVID really took a hit. They really took a hit because of COVID, and that made me re-wonder where was their IP, where are they going to monetize the experience of the IP again. And the next struggle of why I actually sold was actually because Iger left, and we're going to talk about a book later.
Yeah.
Key man risk. Okay, so in your experience, Louis, do you still feel a very strong affiliation? I mean, like you and I
Disney?
grew up in the top. Yeah.
I think okay, personally I feel like I don't get it anymore, like what Disney's
Mm,
doing
mm,
sometimes. Especially with Mermaid's release. I know that they're trying to accommodate to, like more diverse
yeah,
characters.
black woman empowerment and all that kind of thing,
Right,
like that.
right.
Yeah,
I'm all for that, but it's just I don't get it why it has to be done that way. So after that, I just don't understand it anymore. Yeah.
understand. So the brand affiliation is either waning or being
Uh,
confused.
confusing. I just don't know where they're headed right now.
Yeah,
What is gonna happen to? I mean, I went to Tokyo Disneyland before. I loved the experience. I did plan to go before all the Japanese water got dirty and all that. Yeah, I love the experience. It's just the brand. I don't know where it's headed. Yeah, myself.
understand. Yeah. So moving on to the second question, are they profitable and financially stable doing it? I'm just gonna plot out on my favorite tool again, Ticker. So net income, they had a loss in 2020, obviously because of COVID, slowly recovering. They're nowhere near their peak. Look at the peak, Louis. Their peak was 12 billion, 12.6 billion, which was here, 2018, right? And then COVID. And then even though they had the kind of the sales, which is like what, 30 billion more, no, 22 billion more than their 2018 year, but their net income, their profit is not coming back. So the next one is cash flow. You look at it, okay, still very healthy cash flow wise. I think they didn't write down as much in terms of depreciation. Yeah, yeah. Okay, yeah, roughly it's increased a little bit. Okay. So in terms of finance wise, think they're still doing okay, but maybe they're coming to a point of stagnation. Yeah, yeah. And I
Mm-hmm.
think like what you said about the connection or the stories may not connect very well and you get confused kind of audience.
It's a bit confusing. Yeah.
Yeah, yeah. Okay. It doesn't help that Netflix is churning up hit after hit. I mean,
Mm.
can you imagine like no one actually thought things like Queen's Gambit would be
Oh,
such a hit, right? Squid
yeah,
Games
yeah.
would be such a hit, right?
It
So
it's really like movies for the times, like, right
correct,
now. These are things that people would be interested in. Disney
correct,
does. Disney tends to stay, I think, on the conservative side of like movies. Yeah.
correct. And once we talk about the book which we'll recommend later, I think I want to offer a glimpse to like the creative world. Is very, very different from the world where I live in, which is like investing numbers and all that kind of thing, right? So third question, who is the audience and how big can they grow? Now, I think you can Google this thing called total addressable market for streaming. Addressable market for streaming, because this is one of the parts of their business where they want to grow into. Actually, it's exhibiting roughly about 19.3% CAGR over this next few years period. the struggle is this: who will come out the winner? Right now, profitably, only Netflix can do that, right? It's going to be a struggle because while they may have the IP, there's not really much loyalty. I mean, for me as a user, I have both Disney Plus as well as Netflix. There's certain content I enjoy on Netflix. There's certain content I also enjoy on Disney Plus. Like on Disney Plus is because they have Nat Geo content. Yeah. So again, I don't know whether the market is big enough for two or three. I think it is globally. But at the same time, when you talk about waning brand affiliation with children nowadays, I think that is what worries me, because people like me who watch Nat Geo is a very small sliver. What you want is, you want to like the masses, people who watch a Marvel movie, people who watch like a Star Wars. Even Star Wars, yes, it may be very big, but I don't know whether you know of any crazy fanatical Star Wars fans in Malaysia. Not that many, right?
No, not that many. I mean, I have a few friends who are, but they're quite rare. Yeah.
Yeah, exactly. So then you talk about theme parks. They don't have anything big in Malaysia. They have it very big in Japan, in Shanghai. Actually, you want to guess who is the biggest Disneyland in terms of size in the world? Which location?
Size. The Shanghai one?
Yeah, Shanghai is the biggest. The smallest is actually Hong Kong. I don't know whether
All
that's
right.
changed.
Yeah, Hong Kong.
Yeah.
Yeah.
Hong Kong is the smallest, and the tourism spending return has not seen that uptake yet. What we're seeing, the recovery from COVID. So I think that's what is weighing down on Disney right now, lah. Yeah. So in terms of addressable market, theme parks, you could look for the addressable market. For video streaming, this is what I'm showing to you on screen right now. You have to sum all these parts up to really see whether they are, how big their audience really is, lah. Yeah, Louis.
Yeah. So I was just gonna add that, it's kind of scary as I was like looking at the reports around Disney itself in the US. A lot of the theme parks are empty. Yeah, so that was a bit scary because when I went to Tokyo Disneyland, I don't know about the situation in Tokyo, but the queues were like crazy. Like the fastest ones you could get on was half an hour to an hour, and some rides you had to come back 2 hours later with a ticket. Yeah. But now it seems like it's like almost a ghost town in some if you go on TikTok, right? A lot of these like theme parks are empty. So
Yeah.
like I just really wonder like where is it headed, in terms of the films. I'm a bit confused now if the theme parks are emptying, right? If less people go, that actually does deteriorate the experience for the rest, because who's gonna fund for these things, it's a big theme park, right?
That's right.
It's supposed to like have this many customers, but you only have like maybe a fraction of that. That's not gonna cover all the costs, right?
Yeah, your operating cost is already fixed. So
Yeah.
if you don't get that kind of scale, it's going to be tough, lah. Yeah, yeah. But I'm pretty sure they'll return. It's just that whether, like what you said earlier, about the connection to the brand or to the movie, because you see that it has to happen with the movie first, or a marketing. I think of the movie as a customer acquisition cost, because you go to the park. Yes, someone will go to Disneyland, but what would encourage new guys to come into Disneyland is a brand that they built. There's an affiliation with a movie or a theme, then they come to the theme park, you see. But if that is not being churned out correctly, and that's exactly what Bob Iger did very well with his acquisitions of all this content, then the flywheel effect doesn't happen, Louis. That's how I put it. Yeah. So in terms of valuation, the last question before we move on to the other parts, other related kind of questions is, if you're looking at it today, it's going for quite cheap because it's come down by quite a bit.
9-year low.
Yeah, so let's look at 5
Underperforming
years.
S&P.
Yeah, let's look at 3 years. You talk about an average PE during COVID times is about 122 times. Today, you can get it for roughly about 18 times next 12 months. Forward PE, okay? We talk about last 12 months. You're talking about, this is next 12 months, the black one. Wow, it's still quite high. Wow. So it's about 66 times.
Wow. Even
6 times.
even at this price, yeah.
Yeah, because this is what results has happened for the last 12 months. I think forward wise, they're thinking it's cheap because Disney can grow back to its old self.
Right, right,
Yeah,
right.
yeah. Because if you look at the numbers just now, they're nowhere near their peak of 2018 kind of profit numbers. Okay, so valuation wise, yeah, it may look decent right now, but obviously you have to boil down to your own hypothesis and conviction whether can they return to their heydays now with and I'm we're gonna discuss this after this. Is like with Bob Iger coming back, how is it gonna work?
Hmm.
Yeah. So I'm pretty sure you have questions somewhere around there as well, Louis.
Yeah, yeah. I think like one of the big questions that a lot of analysts are asking is if Disney is now too big, right? You mentioned four different like sections that they're making money from. They're thinking now, okay, maybe Disney should split up, right? Parks, then the media stuff and streaming, that will make it more clean. Like, okay,
Mm.
so not to have like one area which is like loss making drag down the rest.
Yeah.
Is it possible that it's too big now? And if
Um.
can it be too big, or if the company is too big, should we be like scared to invest?
Yeah. Actually, there's two sides of the coin. I think in Disney's business case, I'll talk about the disadvantages first. The moment when you're too big, everyone is fighting for their own political kingdom.
Mm.
But the problem is the political kingdom, while they are joined at the hip, the way they function and run is very, very different. And actually, this is something that I got from the book we're going to talk about, which is like The Ride of a Lifetime by Bob Iger. What I really like about the book, he doesn't just talk about his character. He actually
Mm.
talks about the different parts of because he grew up in the media industry. He started from ABC, right? The ABC channel. And what he said, right, the way you work with creative directors and the way you work with bean counters who want to do strategy, projection, business strategy, and all that kind of thing, you have to take a leap of faith with the creative guys. Like for example, he was actually talking extensively about they took a gamble on Black Panther because they
Oh.
didn't know. Yeah, they didn't know because you see, you can have surveys, you can look for customer feedback, whatever. But how will you go around asking? Will you watch a black character play a superpower? And you cannot be asking the kind of questions, right? And you wouldn't never know the response. So they had to take a gamble with Black Panther. You see, and he narrated it quite well in the book to say that creative directors they need to be given the space to try out bold things rather than just be safe. If you've produced like let's say Iron Man 1, 2, and
Mm.
3 sequel, right? It's very
Mm.
safe. It's very safe, right? You already built the brand, you already know that
Yeah.
there's a fan base, whatever. But to try something like Black Panther, it was a gamble on their side. And it's a gamble that most creative directors have to do because if you draw comparison to the fashion world, people like Marc Jacobs, people like Louis Vuitton, people like Gucci, people like Versace, right? There's no playbook or what works. They just have to
Yeah.
try, right?
Yeah.
Yeah. So I think the same goes to that lah. And here's the problem: if you break it up into smaller companies, then how would the intra company pricing be? Do you buy IP rights content if you are like the theme park? That means you become a theme park only company, but then you have to pay the Disney parent company like royalty rights to you.
Oh.
So all
Mm.
that kind of thing will also,
Right. Right. Yeah.
yeah.
Kind of
So
complicated too.
yes, it is being done right now. I'm pretty sure there's like the IP is being paid to this. I haven't studied that deep, but I think that is one potential problem that you may face if you break it up lah. Yeah, and it
Mm.
may not be valued that much because if you look at it, margins from the park may not be that great as compared to the creative studio. And then creative studio is not recurring because it's one hit and then the next one may not be a hit. So you need to have retained earnings from this project to cover the costs or the gamble you take on the next project, you see. So again, yeah,
Mm.
there's no like rigid right or wrong answer to break it up or not lah.
Mm, mm, mm. And then like there's also the issue around the political impact, right? So we have seen like okay, they put a black lady into mermaid.
Yeah.
So that's a very woke move. So this may not appeal to the highly conservative rights of
Yes.
the US, and I think that some are suggesting that's the reason why the theme parks are not filled up, right? So because they are just not supporting Disney. So this how big of an impact would this have, you think?
I don't know. I mean, to be precise, I don't have a strong opinion on this because I don't live in the US and I wouldn't know the sentiment that well about, how well they have taken a liberal stance towards, racism and all that. But I think the international audience is also quite a sizable chunk of Disney's revenue contribution, even though US is definitely, that's where they started. That was the original part. I think how they can circumnavigate this is maybe rather than being just focused on a certain minority or whatever. You start seeing movies like Shang-Yi, which is also a
Mm.
Marvel. So they start doing Asian themes as well. So I think it's a bold part on their move. I think you can never convince the naysayers or those that are ultra racist. I don't think it's worth even like trying to please everyone. So I think I don't have a strong opinion, but I think it's a kudos to them for trying to be more inclusive into other cultures and other races.
Yeah. So I guess the last question that I have around the Disney is what we mentioned a little bit earlier about Bob Iger is
Yeah.
key man risk, right? So we
Yes.
saw that he has been on the helm for decades, but he left. Then 33 months later, he's back again. So what I mean, how much of an impact does he have on Disney, and should we be concerned like when will he leave next, right? He's a
Yeah.
pretty like not very young guy anymore.
Yeah. I think this had the same. I'll draw a parallel to Starbucks, Howard Schultz. If you looked at Starbucks history, he built to Starbucks to where it is today. He also had a falling out with the previous founders and all that kind of thing. But um, Howard Schultz came back again. He left. The new CEO didn't really like stagnated Starbucks, started alienating customers with the new strategy, and Howard Schultz came back and reinvigorated Starbucks. Now, Bob Iger's contribution can not be understated. And if you read the book, which is, I have it here, because this is the book I'm going to recommend. Okay. It's called The Ride of a Lifetime by Robert Iger. Okay. The CEO is coming back. His contribution cannot be understated because he was so bold in going against the board to say that he wanted to buy Pixar. So, yeah, he actually, Pixar, Marvel, 21st Century Fox and Lucasfilm all came under his watch. And the previous CEO, Michael Eisner, was just riding on whatever Disney's library had. And Bob says, nope, we're not going to propel Disney to the next level is if we're going to stick to our library. And he was very bold. He did an analysis of 3 years of Disney's library content and how well they did, and it was abysmal. And he threw it straight to the board. And the board initially was very reluctant to support him and even said that no way you're going to get Steve Jobs to sell Pixar to you and all that kind of thing. So rather than spoil the story, I rather that you go and get the book because it's a fantastic book. And it is very related to your question about Iger coming back in retirement. He's a larger than life figure, contribution, fantastic. Even though he picked Chapek as his as his successor, I think his struggle will be like, can he actually really groom the next successor, or he's just like lining it up back for himself? That's a question that I think even both of us, or even speculators on the sideline, unless you're an insider, unless you like really know what's going on in the head of Bob Iger, then only. But it does really, really play a role in analyzing key man risk, because can Disney not run without him? Because it's supposed to. It's supposed to be a professionally managed company that, yeah. But we can never know what is the internal strife that is going on behind the scenes. Right? Yeah. But I really think that that's a risk that we have to consider if Bob Iger really just.
I mean, because it's kind of proven in a way, since like after he left, all these things happened, and now he's back again.
Yeah.
To spur the ship that he has done so many years.
Yeah.
Yeah.
So,
okay, so
I don't know. But there's a risk when you want to invest.
Yeah. I think whenever like maybe the CEOs like plays too much of a big role, that is a risk in a way.
Exactly,
yeah.
Exactly.
Okay, so to wrap things up, the book.
Yep. It's called The Ride of a Lifetime. I hope you can see you guys see this. Yeah, I'll put it up. Yeah. In the comments as well. Why should we read the book? Actually, as an investor, right? A lot of people think that you should read more investing books.
Mm.
And I'm going to argue otherwise. I learned the most from reading biographies of successful business owners. I draw for you a parallel. So Robert Kwok has a few biographies, but the one that I recommend the most is the thickest, right? And he actually narrated how he handled his father's trading business, how he handled himself as a sugar trader until the days when he handled Shangri-La and all that kind of thing. And in Bob Iger's case, he argued in the creative industry was very different from how he was brought up from a broadcasting studio, ABC, American Broadcasting Corporation, right? He started off way below as like a assistant producer, and the title, while the title seems like sexy, right, Louis? This was the guy that brings coffee to the director,
Mm.
make sure your production cast, all that kind of thing, like all the virtually like a concierge, right? And when he rose through the ranks in ABC. The way that the TV channels and the programming channels for TV is run was very different from that of the creative industry and the movie industry. So I got a good glimpse of how different it is to value a media company, even between the TV and a movie studio. Like Paramount. Like I don't know if you heard of this company called Paramount Pictures. It's like it owns one of the libraries of the most famous movies of our time, right? And you need to let the creative juices flow. You need to take a bet on things that you cannot quantify with numbers in the beginning. And I think that was very interesting for me as an investor, because if I were to invest in a movie or a media company, right, I need to know how it ticks. You see?
Mm.
And
Mm.
one way is to actually go through the struggles of a CEO, and he narrated it very, very well here. I don't want to spoil the book, surprise in the book. I really think I'm not doing it justice by just giving it all away. I think you should really pick it up. I learned so much from like what kind of bets they took, why did they buy, what kind of valuations, what were the struggles, getting the trust of, you just imagine George Lucas, the founder of
Mm.
Star Wars, right? You're virtually taking a piece of his life away, right? And it's now no longer his baby anymore, it's under Disney. And how do you handle that? It's like how Colonel Sanders, when he built KFC, he had this recipe, right? And then when he led it to professional managers and they only care about the numbers, they diluted the brand value, diluted quality. If you're still alive, right, you'll be incensed because this is what you don't stand for, So I
Correct.
think that's what Bob Iger had to struggle with as well. And it gave me a good glimpse of how media companies should be run.
And I think very pointedly, if you are thinking about investing in Disney, it should be a must read,
Yeah,
given that like Bob Iger has been on the helms of Disney for that long. You kind of want to get a glimpse into how he thinks, why he does certain things, and that might give you an idea about like the future as well, right?
precisely.
Okay, so hopefully you guys have learned a lot from today's analysis. Comment below, are you an investor of Disney? Are you planning to keep your stock or dump it? And why? Okay, so if you want to get more analysis like this, stock investing from zero, make sure to subscribe to WangHiro. We do this every week now. So stay tuned and make sure to tune in every Thursday. Okay, so if you like this video in particular, make sure to give it a thumbs up to help us with the YouTube algorithm. Thank you so much. Bye bye.